10x stock selection. I think that this has to be one of my favorite topics in investing to talk about, picking stocks. I think that it is so easy to find good stock investments. It is so easy to make money with stocks. I'm talking about to make 100% of your money. It is easy. That this is my personal belief. But to find 10x stocks, the process doesn't change. What does change is the quality of the companies you have to find that gives you that 10x potential. So a lot of people ask me, so step one, where do I even find stocks in the first place? How do I find stocks that are going to go 10x? Well, first of all, where do I even start to find stocks in the first place? And to that answer, I'm sure you always have that family friend or that family member who always talks about the economy or talks about interest rates or talks about politics or talks about the stock market. And they may be onto something sometimes, they give you or issue you stocks or advise you to pay attention to some certain industries. And from now on, after watching this video, this is advice that you should consider and actually listen to what they say and take note of the stock so that you can research it later. Observe your community. So look around you, right? A lot of the stocks that have the potential to go 5 times, 10 times in growth, a lot of times they may just be doing something near your environment, nearby your immediate community. It might be a new restaurant that everybody keeps visiting and talking about in your area, that seems to be booming. Or it might be a new grocery store that seems to be opening chains in all the metropolitan areas of your country. So observe your community and you can see that companies are doing things around you. Another key place you can actually find stocks is in your workplace. So the company that you work for, my educated people, I know that trading and stock investment attracts very intelligent folks. So I don't downplay you guys' intelligence one bit. And I've come to understand that your workplace is a fantastic place for you to look for stocks, because a lot of you have good jobs and the jobs you work for are companies that are making money, or sometimes companies that are in partnerships with other companies that are making a whole lot of money. Or you can even go far and beyond and look at who is your employer's biggest rival. Sometimes your employer's biggest rival might be the industry leader. They might be making the most amount of money and they might be a wonderful investment for you to make. And then lastly, another tool I use are screeners. So screeners are more like selective tools you can use to search for stocks based off of certain criterias. So say I'm looking for stocks that meet some certain criterias, and I input the criteria into my screeners. My screeners will pull me up stocks that are compliant with my desires. Now, before we move on, I want to go ahead and say this. The reason why making money with stocks is so easy, but so many of you fail to do so and fail to do so consistently, is because when you get a tip on some stock to invest in, you go ahead and invest in that stock. That makes no sense. How would you get a tip from somebody about something to invest your money into, and you go ahead and invest your cash into that thing, basically giving somebody your money for some good or goods without knowing what the product you were buying was or was doing? See, many of us will go to the grocery store, right? Many of us will go to the grocery store and will spend 15 minutes trying to decide what flavor of ice cream they want to pick out. Today they're not feeling vanilla, today they're not feeling strawberry, we're not feeling banana sundae, or we're not feeling the triple fudge. So you can't decide, and you're even calling folks to help you decide what flavor of ice cream to pick out. So, like, why is it that you would spend this much time in the grocery store picking something, but to do the research on what you're about to invest in terms of stocks, a company that you're about to give your money to, like, you seem to not be bothered and not do your due diligence? You see, that homework is really where the 10x program starts. Because you gotta understand that 10x stocks don't start from the 10x stocks. The 10x stock starts from you, the investor. I group my stocks into 5 categories. I group my stocks into the high growth categories. High growth categories are stocks that I believe have the potential to grow 5 times or more. Also, I include dividend lists. So dividend lists are companies that I know that are solid and pay valid amounts of capital of cash in dividends, and I may be looking for dividend stocks to add to my portfolio, or maybe drafting watch lists for dividend stocks, and I would select them. I also group stalwarts. So stalwarts are companies that have grown in value, companies that are profitable, largely profitable with a big audience, and have grown in value and are of significant impact to our economy. But they have reached a point in their business life cycle where there isn't much growth left, and they have pretty much entered every market that they can. So you don't expect exponential profit growth or earnings growth anymore. So it's a wonderful investment because you know that they're going to stay there for a while, but at the same time, so you don't expect them to grow in earnings. The price of a stock is going to follow the growth of its earnings. So stalwarts, for example, will be like Apple or Coca-Cola or the Boeing Airlines. These are These are blue chip companies with large market cap, and they're not going anywhere. But at the same time, too, they've pretty much entered every single market they can. Like Apple can only sell so many iPhones to so many people. Like there's pretty much an iPhone in every home in America. So like, where else are they going to sell their phones? Do you understand me? So that's where we get the concept of stalwarts. And then cyclicals are companies that tend to the cyclicals are companies whose revenue tends to increase and decrease based off of a cycle. So take for example companies that deal with lodging, hospitality like hotels, companies that deal with entertainment like Hershey and Disney resorts. Those type of companies, you're going to see less traction and less business in the fall, in December, January, February. You're going to see shrunk revenue. And then you're going to see heightened revenue during the summertime when it's really hot outside, or if there's a major event going on in that city, then you're going to see a lot of tourism and traffic. So there are cycles for when it's good to invest in those type of companies. Another example of a cyclical company is this tax company. Is it BK Block, BR Block, HR Block? Yeah. So another example of a cyclical company will be HR Block. HR Block deals with tax preparation services. Now, you guys and my CPAs watching this, you know that tax season is only a specific period within the year. It is not an all year round affair unless you're talking about corporate taxes where you need to prepare in advance. So because of that, companies that engage in tax preparation will make a lot of money during the tax season, But during the off season, when taxes are not being prepared, their revenue severely shrinks, right? Or noticeably declines. And the last group I talk about is turnovers. So turnovers, think of turnovers like soccer. Those of you who watch football, soccer, and the European one with the ball. And imagine you're attacking and you're in the bottom, you're in your opponent's third, and you're attacking, and all your attackers and midfielders and defenders are all in that box, and you guys are trying to score a goal. And all of a sudden, the other team gets the ball, and they send it to a winger, and the winger gets behind your last line of defense, and now he's just clear. He's just running down the field. It's just him, and he's heading towards your goal. You see how the people you were playing against, initially they were under pressure, but then they quickly turned the game around. That's the same concept with turnovers. So like companies do go into financial turmoil, but then they bounce back. So during the period when they go into financial turmoil, maybe debt, maybe acquisitions, whatever the case may be, for some reason their market cap declines and we see this drop in stock value, and eventually we say we have change of management, new processes, we have new deals awarded, or we have new access to capital. The company now has new access to capital to now free themselves from whatever was their burden. I think there was a bank one time that had a problem like this, and then they got like $300 million, and that was to alleviate their burden during the COVID-19. But so this problem of turnover is the company is sinking, and then eventually for some reason we have a change in processes and the company starts to recover, and that recovery starts to reflect on the balance sheet. Now the stock value that drops severely, investors will start to see that company as undervalued, and eventually the stock price will want to reflect the new value of the company after it has recovered from its downfall. Now the 10x stock selection program. Now the 10x stock selection program is my process that I have come up with for scrutinizing stocks to find investments that give you a potential return of 1,000%. So imagine you could make 1,000% of your money right now if I told you to buy a certain stock and you bought it. So say you invested $1,000. You didn't make back 1,000. You didn't make back 2,000. You made 10,000. That's what a 10x increase is. That's 1,000% of your money. And this is my process. So it all starts with earnings. Earnings are very crucial. Earnings, the company has to be increasing in earnings. Earnings growth is crucial. I look at the growth of the earnings over the last 5 years. So from an annual perspective, I want to see growth in the earnings over the last 5 years, consistent growth in the earnings, consistent significant growth in the earnings over 5 years. I love companies whose earnings are volatile, so you see like large spikes, even if there are discrepancies in sense that, like, say the company in 2020 was good and in 2021 got better, and in 2022 got significantly better, and in 2023 you see a decline, and then in 2024 you see another significant good performance. So like even when there's discrepancies, I like to see when there's a volatility to show that earnings is significantly increasing. That shows large earning potential. Now the reason why this is important is because if you look at the PE ratio of the stock, the price to earnings ratio, that reflects how long it's going to take for a stock to actually be worth the amount that the price is reflecting. The P ratio may be high or low, but the point I want to make is that ratio, the denominator is the earnings. So if the earnings is increasing, that is always going to decrease the PE ratio, meaning that price will be discounted, cheaper, meaning more people want to get in. meaning more buyers into the market, higher prices. So we look at 5 years annual earning. We look at the last 3 quarters of earnings. We want to see significant growth in the last 3 quarters of their earnings. We want to see solvency. So solvency, I call solvency good balance sheets where a company is profitable, where their net income is at least 10% of their revenue. They should have a debt to asset ratio of at least 3 to 1, so their assets should be at least 3 times their debt. And they need to have cash at hand. Okay? So a company ticks those boxes, then the company has ticked the earnings box if they had 5 years annual growth, 3 quarters growth, then solvency, they are profitable with at least 10% net income compared to revenue. Then their debt to asset ratio is at least 3 to 1, and they have cash. Now, the next step is to identify what exactly is that company selling. So I go to their website, and I also go to some certain stock analysis websites I use, platforms I use. And I go to look at the company's profile, and I also go to look at some stock analysis tools I use to find out what new products. So like a company that has the potential to go 10x needs to have some type of new product or some type of patent to make a product that nobody else can make. Or perhaps they have some assets that is being underlooked by Wall Street. So sometimes you say a company that is generating nuclear power, so they make money from selling uranium, but because of all the land that the company has acquired, all the land is equal to the total to the current share price. Obviously, the share price is undervalued, because if we're considering only the land that the company owns is already equal to the share price, then what if you now add like the actual performance of the company's business? Look at McDonald's, for example. McDonald's makes a lot of money from selling burgers, but at the same time, McDonald's owns a whole lot of real estate. So usually, a company that has 10x potential will have a new product, and if you look into their profile, they need to have some asset that is being underlooked or undervalued by Wall Street, or they should have patents to sell products that are not being copied by any of their rivals. And they should also be the next point is they should be an industry leader. So a 10x potential stock should be leading their industry. So when you look to rank, if you look at their ranked position in their industry, you want to see that 10x potential stock to be in at least the top 15 ranked companies in that industry. If the company is not within that top 15 ranked in that industry in terms of market cap and in terms of PE ratio, then that disqualifies our 10x stock selection. And then the last thing, and this is really the key, right, is market direction. So when you have found a stock that has passed your earnings test, passed your solvency test, passed your new product test, and passed your your industry leadership test, now the last thing that you want to look at is you want to pull up the price chart of that stock, and you want to see where price is. Now, if you're expecting a stock to move in an upward position to go 10 times, if that stock is currently in a downtrend, if that stock is currently in a bullish or in a bearish order flow scenario, it is not yet time. Based off of market direction, yes, you have a 10x potential stock, but it is not yet time to harvest it, not necessarily yet time to sow it. Okay? So market direction is very important. When you're on the right side of the market, then your trade will be sponsored by the institutions. We'll talk about this more in the mentorship. So welcome back, ladies and gentlemen. In this video, I'll be going over my 10x stock screening process. So I will show you how I uncover trades, long positions for long-term long positions for stocks that end up going 10 times in price over the span of 2 years and the likes. Now this is my own process. I have refined this way of scrutinizing the markets to find stocks that have this type of potential. And in the presentation, I talked about the different ways I categorize stocks. So we talked about the stalwarts, the dividend stocks, the high growth, the turnovers, the cyclicals. All right. Now, when you're talking about 10x stocks, you're talking about stocks that have potential for a lot of growth. So those stocks will usually fall into the turnover category, which are stocks that have declined in value and are now undervalued because they have a lot of room for price to run usually. And the other category that you see 10x stocks will be in the growth stocks category. Okay, so these are stocks with low market caps to high market caps with low PE ratios and high earnings potential and strong earnings. So this is one method of finding stocks. Okay, we use this screener. So this screener in front of us is called Finviz. I use this screener as another method of discovering new stocks to invest in. And what this screener does is that it allows you to search for stocks based off of different categories. So here you see Finviz, screener, descriptive, fundamental, technical, news, ETF. So the descriptive will have all the categories that describe a stock, like what exchange the stock is on, the market cap, the price, sector, the volume, industry. You can choose whatever industry you want to search for stocks in. Then fundamental will have the fundamentals of a stock, okay? So like the debt to asset ratio, the PE, the earnings growth, all the stuff that pertains to the fundamental aspects of running a business. The technical category will show you things that pertain looking at the price charts of these stocks. So if you're looking for criteria based off of what is on the chart, like moving averages, gaps, price patterns, average true range, 50-day high and low, the beta, the candlestick patterns, all of that, then you look at the technical side. Well, I don't usually use the technical side. I kind of do the technicals myself. And if you look at the list down here, you see stocks, okay? So here you can actually tap on whatever column is at the top and you can sort the list based off of that. So if I wanted to sort this list in a descending order, showing me the smallest market cap stocks on this list to the highest, I would just tap on the market cap and you see it changes. Okay, so if you want to see the highest to the lowest, you tap on it again and you see Microsoft is the highest, followed by Nvidia, then Apple. So you can search for this. So this is one way I use to come about new stocks, as opposed to finding it from friends and family or my employer or my employer's competition or all the other suitable options I gave you in the presentation. Okay, so now we're going to do a 10x screening process on 2 different stocks and we're going to run through them quickly and objectively. Okay, so the first stock we've decided to screen is ADMA Biologics. If you look to the top left of your screen, ADMA Biologics. So we don't know much about ADMA. We've found it on Finviz. And we want to find out if ADMA has the potential to be a 10x stock or not. Now, following the guidelines I gave you in the presentation, you should know by now that the first thing we're going to look at is the earnings of ADMA. So the first thing we want to investigate is the earnings growth of ADMA. We want to know that ADMA is increasing in earnings. Okay, so to do this, we analyze the first the last 5 years of their performance and earnings to look for a trend. And from here, you see that the first year, 2020, was negative 0.88. 2021 was negative 0.51. 2022 was negative 0.33. So, like, although they were not profitable, they have been paying off, basically paying off their dues and, getting to keep more of their money. And as of 2023, their debt has now gone from 0.88 to 0.13. So that's about a 0.75 decrease in their debt and like a 0.75 increase in their earnings. And of 2024, they are now 0.49. So we know that yes, they are increasing in their earnings. There's growth, consistent growth in their earnings over the last 6 years. So now let's look at the last 5 quarters. So the last 5 quarters on ADMA starts off at 0.09, and at the end of the most recent quarter we look at, we're also at 0.14. So between that, we look at the last 3 quarters, and you see consistency. So we've peaked at 0.16 at the Q3 of 2024, and the Q4 of 2024 we hit 0.14, and Q1 of 2025 we hit 0.14 again. So we're pretty consistent. Now the next test is the solvency test. So the first test, number 1, if you put in your notes, the first test is the earnings, and we look at the last 5 years of annual earnings and the last 3 most recent 3 quarters of their business earnings. So the next thing we want to see now is their balance sheet. We want to do a solvency test. So the solvency test, we following the same template for time frame. We want to look at their revenue, right? So the company over the last 5 years, what is the trend of their revenue? So if you look here, where my mouse is at the center of your screen, where it says total revenue, this number represents 5 years ago, 2020, and they grossed $42 million, $42.2 million. As of 2024, they're grossing $426.45 million. Goddamn. So this company has done 10x in revenue over the last 4 years. Now let's look at their income. While they've done 10x in revenue, this year they are doing, trailing 12 months, they are doing $206 million. 5 years ago, they weren't even profitable. They were negative $75 million. Okay. So in that time frame, their account has grown by $130 million. So they've almost doubled in their income as well. Their earnings should have doubled by now. So their net income has doubled by now. And you can see the trend consistently. To negative 71, to negative 65, negative 28. And in 2024, it became profitable. Closed the year with $197 million. So this is the solvency test. We look at their balance sheet. So we want to see their debt to asset ratio. We want to see how much do they owe compared to how much do they have. So over the last 5 years, we're going to look at the trend. As of 2020, their debt to asset ratio was 0.5. Basically, having assets twice the amount of the debt they have. And today, they have done a good job at maintaining their debt. So from 119 in 2020 to 135 to 196 in 2022, and they've brought it down since then to virtually $149 million. And while at the same time they've managed to increase their assets, or their assets have managed to increase. So now they have almost $500 million in assets and $150 million in debt. So that's what, $350 million different. And cash flow. We look to see if the company has cash, and they do. So you see their cash from operating activities in 2024. You see the cash from investing activities and the cash from financing activities. So they do have cash flow. So they have cash at hand to make more moves. Now, after passing the solvency test, we're going to give A star. We're going to give ADMA a check on this because we've seen consistent growth in their revenue, right? So after passing the solvency test, the next thing we want to look at So after the solvency test, the next thing you are going to look at for this stock is you want to see if the stock you want to so after the solvency test and the earnings test, if a company manages to make it through that stage, the next thing you want to look at is you want to observe the profile of the company. So many times you might find out a company may have, when you check their profile, you want to find a new product that they are selling in the market that is hot and is generating a lot of revenue for them, or you want to see that the company has a patent of some kind to manufacture a product that gives them a competitive edge because nobody else can make that product. For example, Apple has a lot of patents to make things that no other company can make, and or should I say, the company may have tangible assets that are being overlooked by Wall Street. Okay, so I come here to the stock analysis platform. It's a website, you can pull it up, and it should be free, although it comes with ads, but it should be free. And you can subscribe to the free version because the free version pretty much has everything you want. And you want to search up ADMA. Okay, so the stock we're looking at, you want to analyze them now. And when you look at ADMA, this platform will pretty much give you, the basic information about the stock profile, the analysts' thoughts or opinions on the stock, and also their target price. So you can see the target price here that's projected is higher than what we're trading at right now. And you can see if you go to profile, you can see ADMA Biologics, a biopharmaceutical company, develops, manufactures, and markets specialty plasma-derived biologics for the treatment of immune deficiencies and infectious diseases in the United States and internationally. Now, let me give you advice. When you read the company's description, if you read about their operations and their operations is written so complicated that you can't understand what it's saying, chances are it's not a good company to invest in because most likely they don't know what they're doing. So it's good to see a company have a clear description of their processes and the products that they sell and how they integrate with their customers. So here we find out that this is a pharmaceutical company. They develop and manufacture and they sell plasma-derived biologics for immune deficiencies and infectious diseases. So they develop, manufacture, and market drugs for immune deficiencies and infectious diseases. They develop a pipeline of plasma-derived therapeutics comprising products related to the methods of treatment and prevention of S. I assume S is some type of disease. Pneumonia infection for an immunoglobulin. In addition, the company operates source plasma collection facilities. So they also operate source plasma collection facilities, meaning that they also have tangible assets. These facilities would probably be some type of building and land. And then you can see the company sells its products through independent distributors, drug wholesalers, and specialty pharmacies. So from here, you kind of get a description of their business. You can also go as far as checking their profile for more information. All right. So you can literally go and just type in the ticker symbol on Google and the company should come up. So here you can look at the website, search their products. Commercial products are Immune Global product portfolio, with 3 FDA approved products. The mission of ADME Biologics is to continue to successfully commercialize specialty biologics targeted to specific patient populations for the treatment and prevention of assessing infectious disease and management of immune compromised patient populations. So here you can see the different drugs that they offer, and you can go read about them and read about their popularity in the market. Okay, you can also check other parts too. They'll talk about like their new contracts that they have or things that they have going on for them. All right. You want to see when last did an analyst cover the market, cover this stock. Or if a lot of analysts are coming into the market. Because if a lot of analysts aren't covering the stock, then chances are the stock is overlooked by Wall Street. Okay? And after you do the new product test and you find out what's going on inside of the company, you want to check the company, you want to compare the companies to other companies in the sector. Okay? So now the next thing you want to do is you want to go back to TradingView and you want to compare that stock to other stocks in that sector. And you're probably wondering, so why are we doing this? We're doing this because we want to see what we're trying to do here is we want to see, based off of certain criteria like PE ratio, if the stock could be undervalued or overvalued in its sector. Okay, so a stock with a pretty high PE ratio means that the investors think that there's a strong future for the company, so they're willing to pay a lot more. Therefore, the current price is already more expensive than what the company is doing, because we believe that the company is going to do something great in the future. So when the PE ratio is low, it means that the company is still being underlooked. You feel me? So the price is still being traded relatively cheaper and closer to what the real value of the stock is as compared to a high PE ratio stock. Okay? So for this analysis, you want to see, you can just go ahead and honestly, you can search up the name of the stock, ADMA, if you do not know the sector. And it should pop up. So when it pops up, you can check the sector right here. So I want to come over here and check that sector, and looking at this sector, we can see that the company with the highest PE ratio in this sector has a PE ratio of 1,056. Okay, and you can see ADMA here with a PE ratio of 23. So above 23 to the high, you can see that the PE ratio keeps going up and goes all the way to 1,056. And let's compare from the bottom. Let's compare the bottom portion. Okay, so we should have ADMA here, and ADMA to below 23 is I'm saying that ADMA with a PE ratio of 23.56 is in the lower portion of this average. So the average of this industry will be higher than the PE ratio of ADMA. Okay, so ADMA is below industry average, so that's a good sign. And then the last thing we look at, right? So the last thing that we look at when we're analyzing a stock is the chart. So on the chart, you want to see this chart, ADMA, and its movement compared to the general market index. So compared to the S&PX, okay? So if the S&P is rising, in other words, if you look at the S&P market and you see that the market is making an uptrend right now, then you want to see also that ADMA is also making an up move. Okay. Now the other thing you want to look at is you want to look at the stock just the same way I taught you how to read the chart. All right. So you look at the last 3 years. So you look at the last 2 years of price delivery, starting back from where we are now, 2 years ago. Okay. So we'll put a vertical line. All right. Should delineate 2 years from ago, 2 years ago from today. And within that 2 years, you can see that the order flow in the last 2 years has been bullish. Market has been making series of highs, higher highs, and has been killing all the highs. So what that means is when we made this high, price went higher and killed it. So when we made this swing high, price rallied even higher and killed it. When we made this swing high, price rallied even higher and killed it. The principles of order flow I taught you, it should be in your notes. So now we know order flow is bullish. You can come right here and you can draw a range right now on this expansion. From the high to the low. So this is 50% of this displacement right now. This 50% will be at 9.13. So it will be at 8.89. All right. Now the market price action has not shown us a willingness to come lower. As you can see, prices continue to make higher highs and higher lows. So it is too early to basically look for a short position, saying that the market should come back to equilibrium. Instead, since the profile is still bullish, you want to be trading bullish. And the other thing you look for is PDRAs. Okay, so the market formed order blocks here when it made this down close candle. All right, when it made this down close candle, we formed two up close candles that traded above the high of the down close, and then price goes on to break structure to the upside and to continue higher. This setup here is a bullish order block. Now price has traded into it, so we expect price to go higher. Okay, so this is how it come down from the monthly time frame. I'll come down and map out the liquidity pools on the chart. Then we go to the weekly as well to look at order flow. So we look at the range. So we look at order flow on the weekly as well. You can see order flow is bullish, higher highs and higher lows. Then we look at the range on the weekly as well. Then you find the PDRAs on the weekly as well. Then you go and drop down to the daily time frame and do the same thing. So by the time you do this, you will have a clear understanding of the current direction of price. And here's the thing, you want a 10x stock, right? If you want to get a 10x stock, you want to reduce the amount of risk that you're putting on in the market. Meaning is either you're buying really cheap stocks, you're buying small amounts of stocks, or you're buying stocks at the right time just before they take off, so that the stock doesn't have to go that far against you. So what I'm teaching you is to find the direction of stocks so that you can buy stocks at the right moment just before they take off, so that they don't go far against you. And by the time you learn to read the chart, this is what it is. So once you can tell the order flow, on the chart, you expect the price to continue in that direction. So you get the chance to buy when the market dips into a discount of the range created after price has made an expansion upwards. Now let's do another stock. Let's go ahead and identify CCJ. CCJ will go through it it literally takes 15 minutes or less. Let's see how fast we can run through CCJ. So CCJ, another stock we found on the screener. So now the first thing we want to look at, remember guys, what's the first thing we analyze? Earnings. So we go to financials. We want to look at CCJ's earnings over the last 5 years. And you see they started off at negative 1.3. Currently they're at 0.47. 2021 negative 0.00. 2022 0.24. 2023 0.59. So consistent growth over the last 5 years. Okay, we like that. Okay, now the last 5 quarters and the last 3 quarters, what's the trend? Well, we started off at 0.10 and now we're at 0.11. But in between Q1 of 2024 and Q1 of 2025, we have 0.10, we have negative 0.01. Perhaps they invested in their future. Because the next quarter, they're making more money again and then it shoots back up. So it's still an interesting stock. Potential for 10x. Potential for 10x based off of earnings, not enough information. We know that the stock is going to grow. It may be a 3x stock. You get me? It may be a 4x stock, a venture. CCJ could go to $200. But to go to $500, we have to see even more willingness for earnings to grow. So let's look at the income statement. Last 5 years, 2020, 1.41 billion. 2024, 2.1 billion. So their earnings has doubled. Sorry, their revenue has doubled. Remember the last company we looked at, ADMA? Over the last 4 years, they had done 10x in their revenue. This company has done 2x in the revenue over the last 4 years. Okay? So potential for 10x? I don't think so. Is it still a good stock to buy nevertheless? Yeah, it seems like a solid company. They're managing their money well so far. Or at least they know what they're doing with their business in their sales department. So how about their revenue? Okay, their revenue in 2020, their net income, how about their net income, which is what we want to see, net income growth from negative $4.73 million in 2020. In 2023, they were doing $272 million. So as of right now, I don't like the fact that their net income is not up to 10% of their revenue. I don't like that. Typically, you want to see a company doing at least, at the bare minimum, a company should be doing 10% of their revenue in net income. Okay. Quarterly growth, Q3 we'll look at last 3 quarters. The revenue started off at 532 million, and the net income was 5.4 million. Now, last quarter, they made almost $1 billion, $822.19 million, and their income was more than 10% of that. And in Q1 of 2025, they made $548 million, and the net income was $48.47 million. Let's look at their balance sheet. Okay. Now this company, over the last 5 years, they have assets of 5.95 billion to liabilities of 2 billion, and it has grown. The assets have grown to a peak of 7.5 billion, currently sitting at 6.88, and their total liabilities have grown to a peak of 2.9, and currently sitting at 2.46. Okay, so their assets are currently just over 2 times, around almost 3 times their liabilities, which is what we like to see. and their assets peak to their liabilities peak is also about that same range, really. And cash, do they have cash at hand? You want to see that from operating activities? Yes, they do. From investing activities, they're losing out, and financing activities. In total, that comes to 543, 553, 560, 559, 560 million. So yes, they do have cash at hand, as a matter of fact. So I think it's a solid company to invest in, but it's not a 10x. They don't have the potential to go 10x, and you can't expect CCJ as of right now to go from 51 US dollars to 510 US dollars based off of this. So after that, once we look at their website, that's the next thing that we analyze, if you remember. And their website should be CCJ. So we're just going to tap. First, we'll look at their profile on the stock profile, and we're just going to come from here, John. Come from here. Start again. So here we're going to analyze them, CCJ, on the stock analysis platform, and we'll look at CCJ, get to understand their business. So CCJ is actually a nuclear company. It provides uranium for generation of electricity, operates in 3 segments: uranium, fuel services, and Westinghouse. The uranium segment engages in the exploration for, mining, milling, purchases, and sale of uranium concentrate. The fuel services segment is involved in the refining, conversion, and fabrication of uranium concentrate, as well as the purchase and sale of conversion services. So these guys refine, convert, and fabricate uranium concentrates. They also dabble in the trade of it. They also mine, mill, and purchase and sell uranium concentrates. So they're doing a lot with uranium. The company sells its uranium and fuel products and its services to nuclear utilities in the Americas, Europe, and Asia. So it's a worldwide company, and it's based in Canada. All right, so now we can go ahead and search up CCJ. So you have a good understanding of their business. You can go ahead and search up the company on Google. Let's look at CCJ stock. And so now we can look at the company, right? So 2023 sustainability report. Cameco is one of the largest global providers of uranium fuel needed to power a safe, secure energy fuel. Our competitive position is based on our controlling ownership of the world's largest high-grade services, reserves, and low-cost operations, as well as significant investment. You can read all of that. I'll skip to the next paragraph. We are proud to be one of Canada's largest employers of Indigenous people, and our land holding, including exploration, spanned about 1.8 million acres. Oh, that's a lot of land. So they have 1.8 millions in land. So if you convert that land to money, that may be a lot of money, honestly. 1.8 million acres. You can do a quick ChatGPT search, honestly, and convert that to. Let me show you guys. Let me put you on game. So let's go ahead and look at CCJ. I want to see how many shares they have outstanding. So CCJ CCJ has 435 million shares outstanding. Now, I want to search in Saskatchewan. Yeah. So what this does, right, is it wants to see how much is 1.8 million of acres of land worth in US dollar, and then we want to convert that into a share price, and we want to compare the share price to the actual share price of the company CCJ. So the total land value is approximately 6.3 billion dollars, and the total stock price would be 14.48 per share. So going back to CCJ, you know that CCJ is trading for $51.517 per share. So you have to understand that alone, if you subtract virtually $14.67, $14.48 of this share price is the total value of the land. So you see how like you're able to find this type of information from the company's website. Or they may have a patent. So that's the last thing, a patent that allows them to manufacture a good that nobody else is doing. So the next thing you want to look at is compare CCJ's PE ratio to the PE ratio of other companies in that industry. So to do this, we're going to look at Stock Screener. We're going to look for CCJ. You can just type CCJ, and you see it is in the non-energy minerals. So we go to the non-energy minerals under performance, and we want to see, so under the overview and sort by PE. So we want to get a look at like what the average PE is in the industry. So right here we see CCJ close to the top at 130, and above it we have 39, 140, 171, 269, 572, 662, 142, 472, and below it we have many more stocks. So we know that CCJ is obviously in the higher portion of the range of PE ratios. So people think that CCJ is a good company, so they're willing to pay more for it. So I say that CCJ right now is already pretty expensive. We need to see sustainable growth. So now let's take a look at the market direction of CCJ. So if we go back to the stock of CCJ, from a monthly time frame, you can now look at the last 5 years and the last 2 years. So from the last 5 years, 2020, this is where this pretty much this bullish move starts, from May of 2020. So I've put a gray line to delineate May of 2020. And you can see how the market has expanded since then. From that low all the way to this high. The market moved from $9 to $62 between 2020 and now. Between 2023 and now, March 2023 and now, the market has also made another expansive move. So this represents May of 2023. We're currently in May of 2025. So we can take this low to this high. And this is the new swing. Okay. So this is the range of the most current market we're in. So now this is the most current market range we're in, and this is what we're going to concern ourselves with as far as PDRAs and order flow is concerned. So in this market, what is the order flow, right? Order flow in this market we suspect it may be becoming bearish. Prices make a series of higher highs, cross this swing low. Right here, it was violated. So price made a lethargic move up, confirmed that we're still in a bullish market, and now has taken out this swing low. So as a buyer, you want to buy this low, or you want to suspect that price may see selling pressure top and come back down. And if we're still bullish, you know that price is going to reach for the high. So knowing all of that, you can now mark out May of 2023. This is a liquidity void, and price runs out the low right here before an expansive move. So you can mark this out as a rejection block. What happens when price trades into that rejection block? Price trades into the rejection block right here and shoots up. Okay. Now, in doing so, price created a block of orders right here, sell orders, and those price created a block of orders here in this top order block when price made this high. So there's going to be what? Sellers coming to the market on this order, and buyers got to come in at a discount, and we know the buyers are making money. So when the market comes back to this low, the sellers get the chance to close their sell positions, even to make profit on the sell position or close it, and then they can now buy. And the reason they can buy is because they know that under this swing low that we had here, what's the result under swing lows? Remember I told you. Sell stops. The market went to reach for sell stops that were sitting below this low, and that's why the market came all the way lower here to take those. And what happens once the market takes those sell stops right here? It shoots up again lethargically, and now the market was seeing this happen again. This pattern repeating itself. So from the weekly, you get a good feel of what the market is doing. So if you have a good understanding of the direction of order flow on the weekly chart, you can now transpose it. Those same levels from the monthly, you see that these are those buy stops, those sell stops are sitting. The market came and violated it here, giving us what? Failure swing. So now the market has come and traded back into this failure swing, another bullish reference point, and we see a strong bullish candle. That's what we get on CCJ. CCJ can easily rally up, take out this high. And if you understand that, then you can now break it down to the daily chart, looking at the pools of liquidity above where we've just mitigated, and you can look for trade setups to ride that trend. And if you want even greater detail, then you can go into the 2 hour and the 15-minute. So when you look at price direction and you see that you're trying to take a long position, but the market is still trending downwards, your ability to read the chart now will now help you understand that you should wait on your order and allow the market to play out. Good luck, and I wish you success in the market.